Hello everyone, hello and welcome to my channel. Happy New Year to all of you. This is the first video that I'm making for the new year. So I thought that we should start with something that's basic, that I should remind everyone this is the way to make money in trading, and this is trading, this is not gambling. Right, so when we are trading, we're dealing with money, and that is why we must treat trading as a way to make money. And a way to make money is in every industry, in restaurant business, and when you are setting up Amazon, what is it called, FBA, fulfilled by Amazon. Yeah, in everything that we do that's got to do with money, we have to think about one thing, that's the risk. As long as we can minimize the risk, we think about the ways to get around the risk, and the ways to get around the risk will guarantee us the profit that we'll be making. And then we think about the way to maximize the profit. So before profit, we think about the risk. So this video is mostly about how to manage our risk. And since we are using technical analysis, we're using the chart, then I'll be talking about the ways to minimize the risk in technical analysis trading. So before I jump onto the chart, like I said, it is the same if we are in restaurant business. For example, if we are in a restaurant business, if we want to make money in that business, what do we do? For example, if there are 1,000 people that eat out every single day, every single night, 1,000 every single night, and there are for example 500, half of it, who like Italian food, then we know that there are 500 people who dine out in an Italian restaurant or in Italian restaurants. So we may be thinking, okay, I want to make money from this 500 people. So how do we go about making this money? Do we set up 10 restaurants with each restaurant accommodating 100 people? Or do we set up one restaurant, selecting a good location where it's accessible for this 500 people? So how do we go about doing it? So we need to think about the risk. So we are entering the market as a competitor to the existing restaurants, Italian restaurants. So we shouldn't be thinking about taking up all the market share of this market, of this 500 people. So we need to think about how to just make 1% or to attract 1% of these customers. You see, that is how we step into the market, and that is how we minimize the risk, using the least capital and taking it up step by step before we make profit and maximize our profit. Right, I hope you understand what I just said. So basically, in a business, we don't think about monopolizing the business in one go. We don't think about how to make the maximum profit in one go. We take it step by step. We make the money with the least amount of risk. So if we apply that concept to technical analysis, to trading, by looking at the chart, then we are looking at this. For example, no, hold on. Right. For example, this is the amount of money that can be made. No, hold on a second. Right, this is the amount of money that can be made in this market. This is an example that I'm showing you. That's 500%. That's the amount of money that you can make in this market. This is just an example. So, do we go about entering the market at this point? And exit the market at this point? We don't do that. We don't do that. If we do that, then we expose ourselves to a huge variety, to a large range of risk. Basically, the market, upon an external factor, news, the market can go down, all the way down, and you'll be making a loss, or the market can go all the way up to the middle before falling down further. So how do we maximize our profit with the least amount of risk in this kind of market? So yeah, we didn't know that the market was going up, but if we predict that the market we predict that the market is going up, all the way up, or up to here, or if we look at the technical analysis and we look at historical data, the market was going up from here to here. Do we enter the market here and exit the market here? No, we don't do that. Okay, we don't do that. So in technical analysis, there's something called trends. This is what we keep seeing. In any chart, not only financial charts, but any chart. It does this, does this. Any kind of chart will have trends going in, going out, and within the trends we have a lot more trends inside it. So I talked about the restaurant business just now. The restaurant business is basically this whole line. So basically, if, for example, this is don't look at the timeline here. If this is 5 years, and in 5 years we are going to make 100,000. So this is just an example. So in 5 years, if we are going to make 100,000, are we going to enter the market here and exit the market here? And we think that at the end of the 5 years, this market is going to go down. Nobody will buy into this anymore. Nobody is going to this, for example, this Italian restaurant. Nobody is going to this Italian restaurant anymore. then yes, all the restaurants will close up and they will go bankrupt, or basically they close up. Nobody will go to the restaurant anymore. But this is just an example. Do we enter here and exit here? No, we don't do that. We don't do that. So if we are going to into this business, how do we go about doing it? We minimize the risk. For example, we use the least amount of capital to open up one restaurant, and then we analyze if that is we enter here or we enter here and close or exit the market here, and we see, is the market still good for us to enter into this Italian restaurant? Then if yes, then we enter again at this point and we close or we exit the market at this point. And at this point, do we see that it is still if the market is still good for us to buy into this business? If yes, then we enter again and we exit again. Do you see what I mean? So we just want a small amount of the market share of the whole market movement. The whole market is going to make this much, but we are not looking for we are not looking forward to making this much. We only want a small portion of it, and we break our profit into segments, into steps. Okay, so if we think about portfolio, there are many markets out there. Italian restaurant, American restaurant, burgers, or McDonald's, Burger King, and we can diversify our portfolio in this way. And for each market, we only want a small portion of it. That is how business is conducted. That is how we make money in business. We don't make money in business thinking about maximizing our profit to the absolute maximum. No, we don't. We just want a small portion of it, and we want to minimize the risk. We want to analyze where the best entry is and where the best exit is. So in trading, this is exactly what we are going to do. It is exactly the same thing. We don't want to maximize our profit in this way. We don't want to enter here and exit here. What we want to do is to enter here and exit here. That's what we want to do. Okay. So this is a trend. This is also a trend. This is also a trend. So we want to pick up or to choose to select the trend that we are comfortable in. We are that's according to what we determine our risk is. For example, if this trend has a risk of 2%, then we think that 2% is appropriate for our investment. Then we select this trend, we trade this trend, we enter this market at this point and exit the market at this point. We don't look at the rest. Of course, we need to analyze the whole market before we can consider entering at this point and exiting at this point. So that is a form of minimizing risk. Another way of minimizing risk is, of course, by dividing diversification of your portfolio. That's another way of minimizing risk. So I hope that you can understand. Anyone anyone, really anyone, can understand what trading is about. Trading is not about putting in your money when the news is talking about for example, Bitcoin is going to 100,000, and now Bitcoin is for example, when we are up there at 65,000, 69,000, 68,000, and the news is I remember there were a lot of news back then at 65,000, and people are saying, okay, Bitcoin is going to 200,000. Yeah, you have to analyze the market. And after analyzing the market, even when the news is saying that Bitcoin is going to 200,000, do we buy at 65,000 and expect Bitcoin to go all the way up to 200,000? That is the wrong way of thinking. That is the wrong way, the wrong method of trading. We don't trade like that. Oh, hold on. I forgot to share this link to the video, to the live video in my group. Right. So yeah, that is the wrong way of thinking. What we want to do, as I said just now, if this is the let's say we predict that Bitcoin is going to 200,000, yeah, and Bitcoin is now sitting at 65,000. Okay, example, just an example. Do we buy here and I don't know, sell here at 200,000? No, we don't do that. Even if we predict that it's going to 200,000, we don't just buy in and hope that it will go up to 200,000. No, we wait for the right time. We analyze the market. And when the market is ready to go up again, we buy in. We buy here. Right? Remember, we want to minimize the risk, so we want just a small portion of the whole market. Okay? And then we sell here. Okay? And this process is repeated over and over and over again. That is why people can trade daily. They can enter and exit in a single day, because there are trends that happen in a single day, and that is the trend they pick. That is the market they pick to enter and exit within that single day. So a day trader wouldn't enter here and exit at the absolute top, at the absolute profit. We don't do that. So if I show you a good an example, so of course this is historical data, and we can see that this is the top here, and it's going down, and then it's going to the top over here. But I would like to use this as an example to show you that the market behaves the market behaves like this. So this is what I was saying about making profit in segments, making profit step by step. So we have this going up and down. So from my example that I drew just now, we wouldn't enter here and exit here or here. We can do that. We can, absolutely we can. But that increases our risk, right? That increases our risk. What happened? Well, what could happen was that this could go up and then this could continue going down. And that is how we lose money. That's how people think that, okay, it's going up and I enter here, I buy in at this point, and this should continue going up all the way up. But no, they could be making maybe, I don't know, 10%, just an example, 10%, and all of a sudden the next day or the day after they'll be losing that money and probably liquidated or just, you know, underwater for a long time before recovering up, or never again recover. So we don't trade like that. That is irresponsible. We want to minimize the risk. We trade just a small portion of the market where we know we can make money, and then that is repeated over and over again. Okay, now I'm going to show you I'm going to talk about this risk in a different manner, in a different form. So we have an example of this. I'm going to color it orange or blue, and then I'm going to color this orange, and then where was it? Okay. And then there's this trend over here, and I'm going to color it green. So we see that there are many ways to trade, many ways to take profit or to enter and exit. One way is, for example, we get in at this point. Yeah, we can't, you know, take profit here, but of course, like I said just now, we expose ourselves to multiple risks. So we can also exit here. That's better than this, because if you exit here, you can re-enter the market if the condition still is still good. Yeah, and then there's another way, which is to exit the market here, and which is what I prefer. So this is what I prefer. If we look at the profit, the amount of profit that we can get from this stretch is 4%, 4.7. That is enough. That is enough for day trading. And we can repeat that process over and over again. Okay? So another manner that I was talking about is by looking at percentage profit. So if this trend makes 19%, 20% profit, and this trend over here makes 10% profit, and this one here makes 5 or 4% profit, how do we go about minimizing the risk and ensuring our profit? If we know that this is going to make 20% profit, we don't aim for 20% profit, we aim for a fraction of it, a small fraction of it, just 4% or 3%. That is minimizing the risk. And we can also go lower than that if we know that this is going to make 20% profit, or we don't know that, but we know within the 20% profit we are going to make, with almost certainty, 3% profit. Then we go down lower, we go down much lower. Okay, where was it? So instead of making that 4% profit with that green line, okay, it's gone. Yeah, here. Instead of making that 4% with that green line, we can minimize the risk further by making only 1% with that within the green line. Do you see what I mean? So if we know that within the 20% we are going to see within this 20%, okay, I'm going to label it 20%. We are going to see 10% and 5% or 4%. If we know that we are going to see these figures, then how difficult would it be to make 1%? Do you see what I mean? Making 1% is the easiest. Okay? So we make that 1% and repeat the process over and over again. So of course, yeah, if we enter the market here, it is not going to make 1%. It is going to go down before going further up. Okay, but still, it's still within the 20% of movement, or better, it's still within the 10% of the 20%, and it's still going up. So we are only looking forward to make that 1%. How easy can it be? It is this is trading. Okay, this is business. This is not gambling. We don't want to enter here and exit here. We don't want that way of making profit. We don't want that way of gambling with our money. We want the sure way of making profit. I hope everyone can understand what I meant, what I said, because this is trading. This is how we trade. This is how day traders trade. We don't look forward to make that 20%. We don't look forward to making this amount. Okay. Like I showed the group what I've been doing. Hold on a second, I'll show you. Across this stretch, across this Bitcoin pump, from here all the way up, no, across this whole Bitcoin pump, or from the bottom to the top, what I've been doing is not entering at the lowest point possible and closing at this point, 21,000. No, I didn't do that. I've constantly told the group that, okay, this is a good point to enter the market, and then I close profit here, and then, for example, this is not a good point to enter the market, and we close our profit higher, and then this is another good point to enter the market. So we keep analyzing the market. If it's still if the condition for entering or for buying is still there, then we enter the market again and again and again. Yeah, it's this. So I've been longing the market. I've been longing the whole stretch from the bottom to the top, but I take my profit out every single time when I see profit. So I don't hold it and hoping that it will keep going up, because I wouldn't know that Bitcoin would do this parabolic movement. I didn't know that. Okay, so I kept entering and taking profit, entering and taking profit. All right, so that's what I've been doing, and that's how you should be doing if you want to make profit in trading. Yes, real decay. It's you don't think about it as a scalping. Okay, this is not short term or long term. This is about analyzing the market, predicting. Yes, you have to predict where the market is going. If you predict that the market is going up, you take a small fraction of it for your profit. Okay. So there's another way. So now we've talked about technical analysis and trends, how to make profit from this stretch of trend, and there's also a way to minimize your risk by using stop loss. So stop loss is another way of minimizing your risk. How do you minimize your risk? If you know technical analysis, if you know how to read price chart, then you should know about a simple thing called breakout. There's trend breakout, or some call it, well, calling it trend breakout is more appropriate. So some draw a flat trend, which is more assuring. Some also know that this is a correction. So at the end of the correction, it would pump, it would go up and break that trend and continue the major trend. Okay, so if you come to my group, I have educational materials for categorizing trends, for analyzing trends from the macro trends to the micro trend, right? So what I was talking about is if you're going to enter at this point of the breakout, you can measure up the distance to the bottom of that trend. So with a breakout, you assume that the market will continue the uptrend. What is an uptrend? Uptrend is when the market is doing up, down, and up, or higher high, higher low, higher high, higher low, another higher high. That's an uptrend. So you assume that the market is going to continue this uptrend, and because of that, you enter at this point. So when you enter at this point, you have to know how or when the market is going to break that trend, when the market is going to break this up, down, up. Okay, so if the market goes below this point, it breaks the trend. With that in mind, you set your stop loss here. Yeah. So if you measure up the stop loss that you set, that's 2.3. Is that a good stop loss? Is that a good risk for you? For example, you use £1,000, $1,000. Is that $1,000? How much of that $1,000 are you willing to risk? Are you willing to lose? So if you think 2.2, 2.3% is an amount that you're comfortable to lose from from your capital, from your margin, $1,000, then you enter that trade and you set your stop loss at that point. This is another way of minimizing the risk. So your risk is now 2.3%. That is the amount you're going to lose when this trend does not go in the way that you want it to go. Okay? But in this case, the trend went up to this point and then it stagnates, or it does accumulation before going further up. So at this point, what do? You take your profit. Okay? Even though you are going to enter at the same amount, at the same price in the future, you don't know that. You take your profit now before you analyze the market and making your judgment and decision further in the future. Okay, you take your profit, and that profit is almost 3%. That's the amount that you want to make in this market. Okay, so yes, the market is going 20%. BTC always goes, not always, well, often and most likely go 20% for this what I call it a 3-day trend. For a 3-day trend, most likely it goes 20%. So from the 20%, we want to make that 3%, and we do it over and over again. That's how we make profit in trading. I hope everyone can understand what I just said, because this is a really important lesson. This is a really this is the basic, actually. This is the basic of what we should do in trading. And with that basic in mind, we break up our trades, our positions, our portfolios, according to the time that we are comfortable with. For example, I want to keep this portfolio for a week, for 2 days, or even for a few hours. Okay, you select your time frame, you select your time, the time that you're comfortable to keep the position, and you select the point of entry. All right, let's measure up. For example, for this, up to this, it took 3 hours. It took only 3 hours for 3%. Okay, and that is the time frame that I've selected for this trend. That's 3 hours for 3%. So of course it can go up to 5 hours, 6 hours. What I want to say is the time is according to what you're comfortable with, but we want to make money from a fraction of this market. Okay, I think that's the takeaway message from this video. I hope you enjoyed this video. So this is the first video, and I look forward to making more videos like this. I'll be talking about where the market is going, and if you comment in the comment section, I can analyze the market that you want. For example, gold. I predicted that gold would continue going up in the long run. So yeah, like, subscribe, and put some comments. Thank you. See you again.